the basic meaning of a word leverage in financial management. See, leverage is apparently used for your measurement of risk. In finance, we are going to use leverage for what? Measurement of risk. What is going to be the impact of one thing over the other? So leverage basically has three important parts. First, it is called as your operating leverage. Second, it is called as financial leverage. Third, it is called as your combined leverage. Now, operating leverage measures the impact of fixed operating cost. It measures the impact of what? Fixed operating cost. Financial leverage, it measures the impact of fixed financial cost. It measures which impact, beta? Fixed financial cost. And combined leverage now, it measures the impact of total fixed obligation. Okay. So when I'm talking about operating leverage, we want to check the impact of what? Fixed operating cost. Okay. So now you must be wondering, sir, what is the fixed operating cost? Guys, can I put it like this? Sales less variable cost. What do you get? Contribution. From contribution, what do you subtract? Fixed cost. What do you get? EBIT. Okay. Now understand something like this. Suppose one company has a sales of 1 lakh. Variable cost is 70,000. What's your contribution? 30,000. Suppose your fixed cost is, example, 10,000. What's your EBIT, everyone? 20,000. Same company has a sales of 1 lakh. Another company has a sales of 1 lakh. Variable cost is 70. Give me contribution. 30,000. Suppose your fixed cost is 20,000. Can you give me the EBIT? 10,000. Now between company A and company B, which company has a higher element of fixed operating risk? A or B? B has a higher fixed operating cost, so there is more risk to recover that fixed operating cost. So don't you think that the leverage is also going to be higher when we are going to deal with what? Company B. Okay. Now this, if I want to measure with the help of leverage, we use operating leverage. The formula for dash for this is contribution upon EBIT. Because when I'm taking contribution upon EBIT, I am trying to measure the impact of what? Fixed cost in the business. So what is going to be the formula? Everyone please tell me. 30,000 upon 20,000. What is this leverage going to be? 30,000 upon 20,000. Give me, what is this? 1.5:1. And here in this particular case, you all can just check what's my contribution? 30. What's your EBIT? 10,000. Can you please give me what is this ratio, beta? 3:1. So I hope you guys are trying to understand that if the leverage is higher, what does it represent? Can I say the risk of recovery is also going to be higher? Come on, yes or no? Yes, sir. So as you all can see that the fixed cost is more, what does it automatically mean? If the fixed cost is more, don't you think EBIT will fall? If the fixed cost is more, EBIT will fall. Don't you think leverage will go up? Come on, yes or no? Answer is yes. So whenever we are taking operating leverage, what do we take, beta? We take into consideration your contribution upon EBIT. Because between contribution and EBIT, there is only one fixed obligation which we have to recover. And what is that? Nothing but your fixed cost. So can I put it like this? That your operating leverage is nothing but what? Contribution upon EBIT. Okay. Now, if suppose there is company C. Suppose company C has a fixed cost of 50,000. It does not mean that the company C has higher element of risk. Because it depends what is the amount of sales. Suppose the amount of sales is 10 lakhs. Your variable cost is, example, 7 lakhs. Can you give me what's your contribution, beta? 3 lakhs. And now what is going to be your EBIT? 2 lakh 50. Now please check 3 lakh and divide that by 2 lakh 50,000. So if you take 3 lakh and divide that by 2 lakh 50,000, can I say that it has a least leverage of 1.2:1? So as compared to this 3, can I say company C has the lowest operating leverage? Though the fixed cost is higher, but still the operating leverage is lower. Why? Because they have more contribution with them for the purpose of recovery of the fixed cost. Come on, yes or no? Yes, sir. So if I want to calculate your operating leverage, we want to measure the impact of fixed operating cost. What's the formula, guys? Operating leverage is nothing but dash upon dash. contribution upon EBIT. Now, if I continue with the income statement further, from EBIT, what do you subtract? Tell me. Interest. What do you get? EBT. Now, if I want to measure the impact of fixed financial cost, if I want to measure the impact of interest, what do you think should be the formula now for financial leverage? Give me the formula for financial leverage. Come on. EBIT upon EBT. Because now I want to measure the impact of only and only what? Interest. So can I say the formula will become what? EBIT upon EBT. So for operating leverage, what was the formula? Contribution upon EBIT. What's the formula for financial leverage? EBIT upon EBT. Because we want to measure the impact of interest in the business. Okay. So as you all know, sales less variable cost, what do you get? Contribution. So see, in ratio analysis now, our income statement format was very different. What was our income statement format in ratio analysis? We started with what? Sales. We subtracted what? Cost of goods sold. We got gross profit. Then we subtracted operating expenses to get EBIT. But here also we are getting EBIT, but here we have to bifurcate between variable cost and fixed cost. So that's why we take sales less variable cost. What do you get? Contribution. From contribution, what do you subtract? Fixed cost. We get something which is called as your EBIT. From EBIT, what do you subtract? Interest. What do you get? EBT. Okay. So if I just want to measure the impact of operating cost, what's the formula which I will take? Contribution upon EBIT. If I want to measure the impact of interest, what's the formula which I will take? EBIT upon EBT. But if I want to measure the impact of fixed cost and interest both, what's the formula which I will take? Can I say I will take contribution upon EBT? So what's your combined leverage, guys? Can I say that is nothing but contribution upon EBT? Okay. Can you all please tell me what is combined leverage formula? OL into FL. And if I take OL, it is nothing but contribution upon EBIT. If I take FL, EBIT upon EBT, don't you think I'll be left with contribution upon EBT, because it measures the impact of fixed cost and interest both. Understood this? So I have taught you three formulas till now. First, I have taught you what is the formula for operating leverage, then financial leverage, then combined leverage. Operating leverage formula, everyone. Come on. Contribution upon EBIT. FL formula, EBIT upon EBT, and CL is OL into FL. Have you understood this? Okay. But if there is any preference dividend which is also there, if there is any preference dividend which is also there in the question, don't you think because of preference dividend, now my fixed financial obligation is not only interest, but it is also preference dividend in it. Hence, what do you think should be the formula for FL beta? EBIT upon EBT minus preference dividend upon 1 minus tax. So what is the formula now? When there is preference dividend also in the question, what do I have to take? EBIT upon EBT, because EBIT upon EBT gives you the impact of interest. From EBT, what do you have to subtract? Preference dividend, because now your denominator should be further reduced because the leverage is going to be higher. So that's why it will be EBT minus preference dividend, and we divide that with what beta? 1 minus tax. Now why do I have to divide it by 1 minus tax? Because preference dividend always comes after tax. So whenever we have to pay the preference dividend, first we have to arrange for your income tax. So we have to gross it up. And to gross it up, what we will do beta? We will divide that by 1 minus tax. So anything which is post-tax, if you want to bring it to pre-tax, what do? Divide by 1 minus tax. In finance, always remember like this. If there is something which is pre-tax, you want to convert it into post-tax, what do? You multiply it by 1 minus tax. Come on, yaar. You multiply it by 1 minus tax. But if anything which is post-tax, you want to convert that into pre-tax, how will you convert that? Divide that by 1 minus tax. So preference dividend, can I say that it always comes after tax? If I want to bring it before tax, how do I bring it beta? Can I say I have to divide that by 1 minus tax? Because if you have to pay to the preference shareholders, don't you think first you have to pay income tax to the government. Only then you can pay to the preference shareholders. So that's why we have to compulsory take what? Divide that by 1 minus tax and do it accordingly. Are you guys trying to understand this? Okay. So now these are the 4 basic formulas which you have to understand. Okay. First, what is the operating leverage? Everyone please. Contribution upon EBIT. FL, when there is only interest, what is the formula? EBIT upon EBT. But if there is preference dividend also, what's the formula? EBIT upon EBT minus preference dividend upon 1 minus tax. And when there is combined leverage, what will you do? OL into FL. Okay. But we have to also understand that what is the impact of leverage on different types of variables. Okay. Now see, this I actually called it as my dynamic formulas. Now what are these dynamic formulas? I'll tell you. See, a leverage is nothing but a percentage change in dependent variable upon percentage change in independent variable. What is the leverage beta? How do we calculate it? Percentage change in dependent variable upon percentage change in independent variable. Now I'll explain you this. See, from sales, what do you subtract? Variable cost. What do you get? From contribution, what do you subtract? What do you get? EBIT. Do you all agree with this? Okay. Suppose my sales is 1 lakh. My variable cost is 70% of sales. So what is this going to be? 70,000. What will be my contribution? 30,000. Suppose my fixed cost is 15,000. Can you give me EBIT? 15,000. Okay. Now tell me, if the sales increases by some particular percentage, do you think EBIT will remain the same? It will also increase. So it also has to increase by some particular percentage. Okay. Now before that, please tell me, what is the operating leverage contribution upon EBIT? What's my contribution, everyone? 30,000. What's my EBIT, everyone? So can I say this ratio is nothing but 2:1? Now suppose my sales increases by 20%. If my sales increases by 20%, do you think EBIT will increase by 20% only? Will it increase by a higher percentage? Yes or no? Yes, because of the leverage which is given to you. So because of that leverage, will it enhance by some additional more percentage? Come on, yes or no? Yes, sir. So now, if my operating leverage is 2, between sales and EBIT, can you please tell me what is dependent on what? Between sales and EBIT, what is dependent on what? Can I say EBIT is dependent on sales? So it should be percentage change in EBIT, which we need to divide it with what? Percentage change in sales. Come on yaar, yes or no? Percentage change in EBIT, which we have to divide it with what? Percentage change in sales. Can you please tell me what is the percentage change in EBIT? That is something which I want to find out. If the sales increases by how much percentage? 20%. Can you please give me by how much percentage the EBIT will increase, beta? 40%. So my 40% EBIT should increase. So let me check this out. What was my sales earlier, everyone? 1 lakh. How much percentage my sales is increasing? 20%. So can I say this will now become 1 lakh? 20,000. Variable cost is how much percentage? 1 lakh 20 into 70%. How much is this going to be? 84,000. What is my contribution going to be? Come on, come on, come on. 36,000. What's my fixed cost going to be? 15,000. So from 36,000, if I subtract 15,000, what will I get? 21,000. Now just check. My sales, my EBIT old was 15,000. And if I increase that by 40%, please tell me 15,000 add 40%. How much is the answer going to be? Can I say 21,000? So did you realize that when the sales increased by 20%, because of higher leverage, my EBIT continues to remain the same, or it will increase? And it will increase by same percentage or more percentage. Higher the leverage, higher will be the percentage on the basis of which my EBIT is going to enhance. So that is why if a leverage is higher, high risk, high return. In that particular case, can I say my EBIT will also enhance? Come on, yes or no? Yes, sir. Okay. So that is something which we call it as my operating leverage. So once again, what's the formula for operating leverage? Percentage change in EBIT. I will divide that by my percentage change in sales. Can I say this is how I can calculate my operating leverage? Come on, yes or no? Yes, sir. Then also at the same time, there is something which is called as financial leverage. So financial leverage. Now please tell me, if this is my income statement, EBIT minus interest EBT. Now financial leverage means we just have to check the impact of interest. So between EBIT and EBT, what is dependent on what? Between EBIT and EBT, what is dependent on what? EBT is dependent on EBIT. So can I say my financial leverage can also be percentage change in EBT, which I will divide that with what? Percentage change in EBIT. Come on, yaar, yes or no? Yes, sir. So percentage change in EBT, which I will divide it with what? Percentage change in EBIT. Now, it can be EBT also, it can be NPAT also, it can go to EPS also. Because between EBT, NPAT, net profit for equity shareholders, your EPS, everything is dependent on EBIT. If your EBIT changes, don't you think your NPAT will also change? Come on, yaar. If your EBIT will change, your NPAT will also change. If your EBIT will change, will your EPS also change? If your, I hope you guys are trying to understand. So whenever you change all these things, is your NPAT also changing? Come on, yes or no? Yes, sir. So always remember like this, that when it comes to financial leverage, every percentage change in your EBIT, EBT, etc., every percentage change in your EBIT will have your impact on your percentage change in EPS, etc. Okay. So that is how we calculate financial leverage. So what do you think will be your combined leverage? What do you think will be combined leverage? Can you give me the formula for combined leverage? Percentage change in EBT or NPAT or EPS, and we will divide that with what? Percentage change in sales. Percentage change in sales. Because OL into FL, that gives you CL. Are you all okay with this? Okay. So these are the 7 formulas you should know. 7 formulas. How are the 7 formulas? First, can I say first are these 4 formulas? Are you all okay with these 4 formulas? Hello. These are called as static formulas. Everyone, please tell me what is the formula for operating leverage, everyone? Contribution upon EBIT. What's the formula for financial leverage when there is no preference dividend? EBIT upon EBT. What's the formula for financial leverage when there is preference dividend? EBIT upon EBT minus preference dividend upon 1 minus tax. Are you all okay? And what's the formula for combined leverage? OL into FL. Are you all okay with these 4 formulas? Then if I tell you that, what is going to be this percentage change formula? So when I want to calculate the relationship between sales and EBIT, between sales and EBIT, visualize the income statement between sales and EBIT. There is only fixed obligation which is getting covered. And what is that? Fixed cost. So between sales and EBIT, which leverage should I use? Operating leverage. And what is dependent on what? Can you please tell me? EBIT is dependent on sales. So what's the formula which I'll use? Percentage change in EBIT upon percentage change in sales. Are you all okay with this? Again, between EBIT and EBT, what is dependent on what? EBT is dependent on EBIT. Which formula will I use? Percentage change in EBT upon percentage change in EBIT. Formula is FL. And then can I say between sales and EPS? If I want to use, which leverage will I use? OL, FL or CL? CL. And what is dependent on what? EPS is dependent on sales. Formula. Percentage change in EPS upon percentage change in sales. Are you all okay with this? Okay. Also at the same time, in this chapter, we also have to learn a formula for PV ratio. PV ratio is also known as your profit volume ratio. What's the formula for profit volume ratio? Contribution upon sales into 100. Okay. And sometimes they will give you margin of safety sales. What will they give you? Margin of safety. Now, margin of safety sales is nothing but actual sales minus break-even point sales. That is called as margin of safety sales. Suppose my break-even sales is 10 lakhs. Can I say at 10 lakhs, my EBIT will be 0? But if I'm earning 15 lakhs, if my sales is 15 lakhs, then can I say 5 lakh rupees will be called as what? Margin of safety. So that is called as margin of safety sales. So sometimes operating leverage can be 1 divided by margin of safety sales. So this is also one of the formula to calculate your operating leverage. Suppose they'll tell you margin of safety sales is 50%. So you then have to take 1 divide that by 50%. So what is your operating leverage in that particular case? 2 times. So sometimes they will give you margin of safety sales and we can calculate operating leverage by taking 1 divided by margin of safety. Have you understood this? So this chapter only has these many formulas. That's it. Based on that, now we can start with the practical problems. So I want you all to now please come to fast illustrations. Okay. Now, very basic illustrations which are given to you, we'll quickly do it. Okay. A company produces and sells how many shirts? 10,000 shirts. The selling price is 500, variable cost is 200, fixed operating cost is 25 lakhs. Calculate operating leverage. Now just check, this is very simple. Do you have sales in the question? Come on, yes or no? Yes, sir. 10,000 or 500. So we have sales of what? 50 lakhs. Come on, yaar. From sales, now what is the variable cost which is given to you? 200. So can I say my variable cost will be nothing but 20 lakhs? So from 50 lakhs, if I subtract variable cost 20 lakhs, what will I get? Contribution. My contribution will be how much? 30 lakhs. Now what is the fixed cost which I have? 25 lakhs. So can I say my EBIT is 5 lakhs? They have told you to calculate operating leverage. What's the formula for operating leverage, everyone? Contribution upon EBIT. Do you have contribution? Yes. Do you have EBIT? Yes. What will be your operating leverage? 6 times. Superb. Okay. Second, if sales go up by 10%, what is the impact on EBIT? What is dependent on what? EBIT is dependent on sales. So can I say I can write down operating leverage as percentage change in EBIT, which I will divide that by percentage change in sales. Come on, yaar. I already have the operating leverage with me. How much is that? 6 times. So if this is 6 times and if my sales increases by 10%, what do you think will be the percentage change in EBIT? 60%. So my old EBIT was 5 lakhs. Add 60%. That will give me my new EBIT. Superb. Okay. Absolutely clear. Illustration 2. We are required to calculate operating leverage for the 4 firms A, B, C and D from the following data. So we have sales, selling price, variable cost, fixed operating cost. What calculations can you draw with respect to the level of fixed cost and the degree of operating leverage? And they have told you that the quantity sold is 5,000. So I can take 5,000 into 20. Will I get my sales? Come on here. Then 5,000 into 6. Will I get my variable cost? It's low battery. Anyway, this will go. In 5 minutes, this will go. Anyway, let us do till the time the mic is working. Can I say from sales, if I subtract variable cost? So from sales, if I subtract variable cost, what do I get? Contribution. From contribution, what's the fixed operating cost, guys? Come on, solo. What's your fixed operating cost? 60. So if I subtract 60, I'll be getting EBIT. So now can I calculate my degree of operating leverage for A, B, C and D just by simply applying the formula? Okay. And now you all can just check that which company has the maximum risk. Can I say company A because it has the highest operating leverage? So that's what it's specified here. Okay. check. Are you guys okay? यहाँ तक डन? ओके. अभी ये था आपका different types of ratios. Okay. Now coming back to this particular question. Okay. Now what is the next question? So just check. For financial leverage, for combined leverage, all these things we are done with. Come to question number 3, illustration 3. Now see what is given to you. That the sales, first and second illustration is done, right? This is illustration 3. Sales is given to you as 24 lakhs, variable cost is 50%, fixed cost is 10 lakhs. And it borrowed 10 lakhs at 10% per annum and it has equity share capital of 10 lakhs, rupees 100 each. Consider 50% tax rate. You are required to calculate OL, FL, CL, ROI. So how will you calculate OL, guys? OL, contribution upon EBIT, right? So we just have to prepare the income statement like this: sales, variable cost, contribution, fixed cost, EBIT, interest, EBT, tax. Just substitute the data. We'll be getting this as an income statement format. Now we are required to calculate operating leverage. Can I say this will be nothing but contribution upon EBIT? So that will be nothing but 6. Come on, yes or no? Yes, sir. Second, your financial leverage. Now for financial leverage, is there any preference dividend or no preference dividend? No preference dividend. What is going to be the formula for the same? Can I say EBIT upon EBT? We have EBIT and we divide that by EBT. So that will give you your FL, that is 2 times. And can I say CL will be OL into FL? So that is going to be 12 times. Are you all okay with this? Okay. What is return on investments? I have explained you this earlier. Return on investment is nothing but return on your capital employed. What's the formula for the same? EBIT upon capital employed into 100. Do you have EBIT available? Come on, yes or no? Yes, sir. What is capital employed? Capital employed means debt plus equity. What's the amount of debt? 10 lakhs. What's the amount of equity? 10 lakhs. Can I say total will become what? 20 lakhs. So that is why here they have taken it only equity shareholders funds, but we have to always take what? Shareholders, debt plus equity both. Okay. So just ignore this particular part and take EBIT upon capital employed into 100. So that will give you your return on investments. Okay. Always. Then what's the next part? If the sales increases by 6 lakhs, what will be the new EBIT? What is the relationship between EBIT and sales? Can you please tell me, in sales and EBIT, what is dependent on what? EBIT is dependent on sales. Can you please tell me which leverage will I use, beta? OL, FL or CL? OL, because between EBIT and sales, can I put it like this, that we have to take into consideration our operating leverage because only fixed obligation is getting covered. So just check in the fourth part, have we taken the operating leverage? Come on, yes or no? Yes. And on that basis, we have got the answer. Okay. Now illustration 4th. The following information is relating to Yeezy company for the current financial information in which there is equity, 12% bonds, sales, fixed cost, FL, PV ratio and income tax rate. You are required to calculate what should be your OL, CL, EPS. Now this question I just want you all to pay attention. Okay. Now in this illustration 4, what is happening? See. Do you have first of all your sales given to you? Come on, yes or no? Yes, sir. Give me the amount of the sales, everyone. 84 lakhs. Okay. From sales, what do you subtract? Variable cost. What's the variable cost percent? They have not given to you, but they have given to you PV ratio. Now what is PV ratio, my dear students? Profit volume ratio, which is contribution upon sales. So obviously if profit volume ratio is available, we can also get variable cost. If profit volume is 40%, variable cost is 60%, obviously. Okay, but still, chalo, what is the profit volume ratio which they have told you? That is nothing but 27.55. So this is 27.55. Now can you please give me what is your variable cost? This has to be 72.45. So please give me first what is going to be my contribution. From 84 lakhs, if I multiply this by 27.55%, can you give me what is this? 23 lakh 14,200. So can I say variable cost will be the balancing figure? 60 lakh 85,800. You guys got this? Okay. Then from this, what do we subtract next? Fixed cost. So what is the fixed cost which they have given to you? 6 lakh 96,000. Come on here. And then immediately you will be getting something which is called as your EBIT. What's your EBIT, guys? So your EBIT will be nothing but, if you guys can just check, 16 lakh 18,200. From EBIT, then what do you subtract? Interest. What do you get, everyone? EBT. Now just wait here for 1 minute. See, my dear students, they have told you that there is 12% bonds of 37 lakhs. Okay. And they have also give you financial leverage. Now please tell me, what's the formula for financial leverage? EBIT upon EBT. Can you please give me what is FL, beta? FL? How much is it? 1.49. So this is 1.49 is equal to EBIT upon what is EBT? Can I say EBT is nothing but EBIT minus interest? Come on, yaar. So that is nothing but EBIT minus interest. Now give me what is the EBIT which you have got. It is 16 lakh 18,200. So can I say this is 16 lakh 18,200. This I have to divide it by 16 lakh 18,200 minus X. If I do that, can I say I'll be getting the amount of interest? Okay. I just want you all to just do this exercise and give me the amount of interest. What is the amount of interest which you are getting? Just give me that. Give me the amount of interest. So it should be coming as 5,32,160. This should be the amount of interest which should come. Right? This should be, because they have given to you a financial leverage. So based on that, the amount of the interest which should come is 5,32,160. This should be the amount of interest. Okay, if you solve this. But just check what is the amount of interest which they have given to you in the question. It is 37 lakhs multiplied by 12%. Can you just calculate this 37 lakhs, multiplied that by 12%? Can I say it is only 4,44,000? Now, are you understanding that in this question, there is some hidden interest? What is in this question, beta? Hidden interest. So there is some interest in the question, but have they specified the interest or they have not specified the interest? They have not specified. So is there any hidden interest? Come on, yes or no? Yes, sir. So can you please give me what is going to be hidden interest now? From this, if I subtract 4,44,000, how much is that? 88,160. So can I say in this question, there is 88,160 plus 4,44,000. So we have to check like this. When we prepare the income statement, we are going to get EBIT. And then they have given you an FL. So check with the amount of FL, what's the amount of the interest which should come. So if that amount of the interest is not matching, can I say that the balancing figure will be treated as your balancing interest? Come on, yes or no? Then the answer is yes, sir. Did you guys realize this? Okay. And then the question is normal only. Then we are going to get your E8, EBT less tax. We are going to get your NPAT. Then they have told you to calculate OL, CL, EPS. So OL, what's the formula? Everyone in one voice. What's the formula for OL? Contribution upon EBIT. Do you have contribution? Come on here. Do you have EBIT? So contribution upon EBIT. That will give you your OL. And then what's your CL? OL into FL. And what's your EPS? Net profit for equity shareholders. We divide that by number of equity shares. Have you all understood this? Okay. Now, come to illustration 5. Following are the selected financial information given for A and B for the current financial year. We have variable cost, we have interest, we have OL, we have FL, we have tax rate. You are required to find out EBIT, etc. Now, how should you approach this particular question? See guys, can I say that sales less variable cost, what will you get? Contribution less fixed cost, what will you get? EBIT less interest, what will you get? EBT. What's the tax rate given to you in the question? 30%. So can I say I'll be getting my NPAT? Now please tell me, I'll just do it for one company, A Limited. Do you have interest available? I'm asking you, do you have interest available? What's the amount of the interest? 20,000. Come on, yaar. Now, do I have the FL given to you in the question? What's the FL? 3. Please tell me what's the formula for FL? EBIT upon EBT. Can I say I can write down this FL as EBIT upon EBIT minus interest? Solo here, because that EBIT is nothing but EBIT minus interest. So can I expand it? Now let the EBIT be X upon X minus, what's the interest? 20. And what's your FL given to you? Your FL which is given to you, that is nothing but 3. Can I say I can now find out what is the amount of my EBIT? So this will now become what? 3x minus 60 is equal to x. So this is 2x is equal to 60. So what's your x? 30. So your EBIT is what? 30. Solu yaar. So this is 30, this is 20. What is this? 10. This is 10, this is 30. What is this? 3. So this has to be 7. Go reverse. Now just check. Do you also have OL in the question? Come on, yes or no? Yes, sir. What's your OL? 5. Give me OL formula. Contribution upon EBIT. What's your OL? 5. So this will become 5 is equal to contribution is X upon what's your EBIT? 30. Can you give me contribution? 1,50,000. So I'll be getting my contribution which is 1,50,000. So what's your fixed cost? Can I say 1,20,000? That's my fixed cost. Now can you please tell me what is your variable cost? 60%. So if this is 100, this is 60, this will become 40. Can we get the 100 amount? Come on, yes or no? Yes, sir. We have to take 150 into 100, divide that by 40. 3,75,000. Superb. Have you realized? So when we have interest and when we have FL, can I use this particular pattern? FL is equal to EBIT upon EBT and EBIT upon EBIT minus interest. Let the EBIT be X. We already have the amount of interest. We can find your X and based on that we can get it. Superb. Everyone's okay with this? Sure, confident. Okay. Now after this, what do we have next? They have told you sales, fixed costs, etc. Everything we have calculated. Okay. Now, my dear students, come to the practical problems. Okay. Practical problems. Are you all ready? Are you all ready or you all are tired? Too much of questions we are solving today. Okay. But revision is to be done like this only. And there is a perception in your mind that you all have already understood all these concepts. You all know it still. I'm trying to explain as much as possible wherever there is required. But as I told you earlier also, whatever I am revising now, after this revision lecture is over, open your study module, take out the question, start practicing. Okay? In rough work. Whatever you are going to practice now, that will really help you to build on the confidence. The concepts will become more and more strong. I know it is going to be tiring, but this 4 days now, give it for yourself. Okay, try to study as much as possible. So if you are able to solve more now, whatever you have revised, you have solved, just imagine how much better your concepts will become. So it will become more and more strong. Okay, it will be tiring, I know that. Sitting for so much long and then again going home and revising it is going to be tiring. But try to do as much as you can. Okay, so that will really help you to build up on this. Okay, let us start with practical problems. Shall we start? Okay, now see what is given to you. From the following information from the books of IMAX, we are required to calculate the percentage change in EPS. If the sales increases by 10%, fixed operating cost is 157,500. Everyone please tell me, now we have a relationship between dash and dash. Come on. We have a relationship between which two variables in this question? They have told you percentage change in EPS and sales increases by 10%. Which relationship do we have, beta? Very good. Can I say we are going to now use combined leverage? because we want to find out between dash and dash, between sales and EPS. So my dear students, in this particular question, you have what do we have here? Calculate the percentage change in EPS if sales increases by 10%. We have fixed operating cost, we have EBIT, we have EBT. How will we do this? Sales less variable cost, what do you get? Contribution minus fixed cost, what do you get? EBIT minus interest, what do you get? EBT, right? Do you have your EBT? Solo yaar, 14 lakhs. Do you have your interest? Is there any interest? No. You have EBIT? Yes. 31 lakh 50. Can I get my interest? Give me interest. 17 lakh 50. Do I have my fixed cost? How much is my fixed cost, everyone? 157 500. Will I get my contribution? Give me contribution. How much is it? 29 lakh, sorry, 31 lakh 50,000 plus 157 500, 33 lakh 7,500. Hello, can we calculate your operating leverage? Can we calculate your combined leverage? Chalo, combined leverage, can we calculate it? OL into FL, but that is nothing but contribution upon EBIT into EBIT upon EBT. So EBIT gets cancelled. Low contribution upon EBT. Do you have contribution? Do you have EBT? Give me my CL. 2.3625. What have they asked? Calculate percentage change in EPS if sales increases by 10%. So what is CL? Can I say percentage change in EPS upon percentage change in sales? What's your percentage change? What's your CL beta? 2.3625 is X upon 10%. What is this answer going to be? 23.625. Superb. Have you all understood this? So we'll be getting this 23.625%. This is the first part. Okay. You all can just check 23.625%. Second, consider the following information of mega production level contribution OL CL. Guys, please tell me, this will give you what? FL. FL will be what? 24, divide that by 6. 4 will be FL, tax rate. You are required to calculate earning after tax. Now this is very easy to calculate, beta. We have contribution. Okay. We just have to prepare the income statement. We have OL, we have CL, etc. Once we have OL, we'll be getting EBIT. With the help of EBIT, then we using FL, we'll be getting EBT. Tax, will be getting the impact. So I'm not solving this. You can do it very easily based on OL, FL, CL. Okay. Question number 3. Now in this question also, it's very simple. We are required to prepare income statement. The only thing is we have margin of safety, we have interest, we have profit volume ratio, we have FL, and we have tax rate which is given to you. Now how should we approach this? So I will solve for one particular company, company A. This is practical problem 3. What's the format of the income statement? Sales, what do you subtract? Variable cost, what do you get? Come on, Shri. Contribution, what do you subtract? Fixed cost, what will you get? What do you subtract? What will you get? Is there any tax? Yes. If you subtract tax, which is at the rate of what? 45. What will you get? NPAT. Come on, yaar. Please tell me, do you have interest in the question? How much is that? 3,000. Do you have FL in the question? Come on, yaar. So please tell me, what is FL? Yeah, but what is the formula? EBIT upon EBT. So FL is 4. This is X. X upon X minus 3,000. Can we find out this? 4X minus 12,000 is equal to X. So this is 3X is equal to 12. So what's your X? 4,000. Solo yaar. So X is 4,000. So EBIT is 4. So what is your EBT? 1,000. This is 450. This is 550. And now after that, do you have profit volume ratio? Yes. What is profit volume ratio? It is contribution upon sales. So profit volume ratio is 25. So what is your variable cost? 75. But now I don't know how to proceed further. But do I have MOS? Margin of safety. What is margin of safety? 0.2. 0.2 is also known as 20%. So now if I ask you what is operating leverage, 1 minus 1 upon MOS. So 1 divided by 0.2, how much is that? This is 5 times. So now my operating leverage is 5 times. So what's the formula for operating leverage, everyone? Contribution upon EBIT. Do I have operating leverage 5? Solu yaar. What's your EBIT? 4,000. So now what's going to be my contribution? 20,000. So this was now going to be 20,000. So what is this going to be? 16. And once I have this 20, can I get my 100? So this is 20,000 into 100 divided by 25. How much is that? 80,000. Come on, yaar. Everyone got this? Perfect. Third is over. Fourth. Okay. What is given to you in question number 4? The capital structure of PS at the end of the current financial year is given to you. We have equity share capital of 10 lakhs. What is your face value, everyone? 100 each. Okay. What is going to be a number of equity shares? What is going to be the number of equity shares? Can you give me number of equity shares? 10,000 shares. Debentures is 10 lakh and this is 10% rate of interest which is given to you. So what's the amount of interest? 1 lakh. During the year, the sales decreased to 1 lakh units as compared to 1,20,000 in the previous year. However, the selling price was at 12 rupees. Variable cost was 8. Fixed cost was 2 lakhs. Income tax rate is given to you. We are required to calculate FL and OL and the percentage change in EPS. So in this question, can I say we have to prepare income statement first by taking 1,20,000 units? And then we have to prepare by taking what? 1 lakh units. So it's the same format. Nothing has changed. We have selling price. We have everything given to you. We just have to substitute that in the income statement and get the answer. So this I'm not solving it. You will be able to manage it. There is nothing new in this illustration 4. Okay. Come to illustration 5. Practical problem 5. What is given to you? But see, all these questions which I'm telling you now that you have to solve it on your own. Today only go home and solve it. So once we are done here, and if you practice it also now, you will be able to understand this in much better way. Okay. Fifth, the sales of TM is rupees 20 per unit, and of the output is rupees 20 lakhs, and the contribution is what? 10 lakhs. Can you please tell me now, sales less variable cost, what will you get? Contribution less fixed cost, what will you get? EBIT less interest, what will you get? EBT less tax, what will you get? NPAT. Come on, yaar. Now tell me, what is the sales they have told you? 20 lakhs. Come on. What's the variable cost? They have told you contribution is what? 10 lakhs. And then after that, they have told you at present level, the DOL of the company is 2.5. It means operating leverage is given to you as 2.5. The company does not have any preferences. The number of shares is 1. Applicable tax rate is 50. Rate of interest on debt capital is 16. Calculate the EPS at sales revenue of 20 lakhs. Amount of the debt and amount of the debt capital of the company. If there is a 25% decline in the sales, will wipe out the EPS. So first what we have to do is, first we have to prepare our normal income statement. In a normal income statement, can you please tell me what's the operating leverage given to you? 2.5. Give me the formula of OL. So what's my contribution? Okay, and what's my OL? What's my OL, guys? My OL is 2.5. So this is 2.5 is equal to 10 lakh upon now can you please tell me what is going to be my EBIT? Huh? 4 lakhs. So my EBIT is 4 lakhs. Can you give me fixed cost? 6 lakhs. Are you all convinced? Okay. Now they have told you that The degree of operating leverage is given to you. The company does not have any preference shares. The number of shares is 1 lakh. Applicable is this. The rate of interest is 16%. Calculate the EPS at sales revenue of 20 lakhs and the amount of debt. Okay. And we also have to calculate the amount of debt if a 25% decline in sales will wipe out the EPS. Can I put it like this? That if my sales reduces by 25%, my EPS reduces by 100%. Wipe out the EPS means what? EPS has to be 0. So can I say combined leverage is percentage change in EPS upon percentage change in sales? So this is now going to be what? 100 upon 25. So what's my CL? 4. Now if I have the CL available, can I calculate FL? Because what is CL, guys? OL into FL. CL is 4. What's my OL? Come on. 2.5. So what will be my FL? My FL is going to be 1.6. Now can I say FL is EBIT upon EBT? My FL is 1.6. Do I have my EBIT? Yes. How much is that? 4 lakhs. So if this is 4 lakhs, can you give me EBT? What is my EBT, guys? 2,50,000. Kya hai 2,50,000? EBT. This is nothing but my EBT, which is 2,50,000. Can you give me interest? 1,50,000. And what's the tax rate? 50%. So what is this going to be? 1,25,000. So this is also going to be 1,25,000. Do you guys understand this? Okay. Now please tell me. After doing this, now please tell me, what have they asked you? What is the, calculate the EPS. So now this is NPAT. I have to divide that with what? Number of equity shares. So 1,25,000, if I divide that by 1 lakh, how much is this going to be? 1.25. Okay. And also at the same time, please tell me that what is going to be your amount of debt. So my interest is 1,50,000. And what's the rate of interest? 16%. So if you take 1,50,000 and divide that by 16%, 9,37,500. So these are the two answers. 9,37,500 and your 1.25. Are you guys understanding this? Okay. So see, you all can check this out here. Which was this question? 5, na? 9,37,500, 1.2. But if you do it in our way now, vertically, things will become much more easy. Rather than, the way they have done it step by step, you'll not understand like this. But if you do it from income statement perspective, it becomes much more easier. Okay, so do it from that perspective. Okay. 6th question. Now this type of question is, Institute's one of the favorite questions. Beta has the following balance sheet and the income statement information. Okay. Just give me like 15 minutes more. In 15 minutes, this will be over. Okay. What is given to you? Net fixed assets, current assets. There is equity capital. There is 10% debt. There is retained earnings and there is current liabilities. We also have the income statement available. Now see, when they give you this income statement in which 60,000 is depreciation, can I say this 60,000 is depreciation? So what about the balance 60,000? Can I say this will be other than depreciation cost? So that depreciation is always treated as your fixed cost and this will be your variable cost. So in our income statement, we always need what? Sales less variable cost, contribution less fixed cost, that will give you EBIT. So my dear students, we have sales of what? 3,40,000. What is the amount of the variable cost which we have? 60. Then can I say I'll be getting contribution from that? What we will subtract beta? Fixed cost, which is your depreciation 60. Then we have to prepare the income statement. Determine OL, FL and CL. So the way I told you, if you'll prepare the income statement, don't you think you will be able to calculate OL, FL and CL? Come on, yes or no? Yes, sir. And then that's what they have mentioned. See, all the operating expenses other than depreciation are your variable cost. That's we already interpreted earlier only. Okay. If the total assets remain the same, but sales increases by 20% or decreases by 20%, compute the EPS. Now you guys are very much intelligent enough to tell me that if the sales increases and decreases and we want to calculate the percentage change in EPS, which leverage should I use? Combined leverage. So that will be percentage change in EPS upon percentage change in sales. So based on that, we can get the final answer. Okay. Question number 7, again very easy. We just have to prepare the income statement. But in this question number 7, now to prepare with the income statement, do I have the total of the asset side? Do I have the total of the asset side? What's the total of the asset side? 20 crores. Now please tell me, what is your total asset turnover ratio formula? Sales upon total assets. So can I calculate the amount of the sales based on this total asset turnover ratio? Come on, yes or no? Yes, sir. So here in this particular question, what was different, beta? In this question, we did not have income statement sales, but what did we have? We have total asset turnover ratio. So can I calculate my total asset turnover ratio based on your sales? Come on, yes or no? Yes, sir. So on that basis, we can calculate it. So this particular question, we have to prepare the income statement starting with sales, but this sales we have to calculate with the help of total asset turnover ratio. That is the only thing which is different. Question number 8, we are required to calculate OL, FL and CL for situation 1 and 2 for plan A and B. So here we are going to have 4 answers because there is plan A, situation 1 and 2, plan B, situation 1 and 2. So how many answers are we going to get, beta? 4 answers. We have installed capacity which is 4,000 units and actual production and sales is 75% of the capacity. Can you all please tell me, if the actual production and sales is 75% of the capacity, it means that we are going to operate our sales at 4,000 into 75%. How much is that? 3,000. So can I say 3,000 will be treated as my nothing but the quantity? Come on, yes or no? Yes, sir. So 3,000 will be treated as my amount of your quantity. Okay. So now we'll be having your amount of what? Sales, right? And then based on that, sales will be calculated by taking 3,000 and we'll multiply that by the selling price per unit. That is going to be 30. Will that give you the amount of the sales? Come on, yes or no? Yes, sir. Variable cost will also be multiplied by that. But what about your fixed cost? So can I say under your first situation, what's my fixed cost, beta? 15,000. So now in this particular case, see, as I told you, we have to prepare 4 answers. Just check. This is situation 1 and situation 2. So we have to prepare the income statement like this. And then for financial leverage, please tell me that if suppose there is change in financial plans, then which leverage will be affected? OL will be affected or FL will be affected? FL. So till OL everything is same. But still I want you all to prepare the income statement in this particular format. We have situation 1. There is going to be plan A, plan B. Got it? And then take situation 2 and then take plan A, plan B. Right? And then prepare from sales less variable cost. What will you get? Contribution less fixed cost. What will you get? EBIT. Less interest. What will you get? EBT. So I want you to solve question number 8 in this particular format. Okay? So then you will be getting OL, FL. Okay? You got this? So this is how we are going to solve your question number 8. Okay. Now question number 9. This question now is more related to your capital structure question. Okay. Because here we have some existing capital employed. We are taking some more capital employed. We are calculating EPS and then we are going to calculate the leverage. Okay. So this we will do it up with capital structure. Okay. Once after capital structure chapter is done, this will be much more easier for you. Okay. 10th question, very similar to what we have done earlier. We have OL, we have CL. Can we get FL based on this? Come on, yes or no? Yes. We have sales. Then we just have to prepare the income statement format. That easy limited question which we did now. Same type we are going to do here. But the only thing is in this question, there is no hidden interest. We have to just solve it normally only. So you solve it normally, you will be getting the final answer. Okay. What is the formula for PV ratio, everyone? Contribution upon sales into 100. And what will be your EPS, guys? Net profit for equity shareholders, divide that by number of equity shares, will be getting your EPS. So this is the same question which we have to do it. Okay. Question number 11. Guys, just check. How many forms do we have? 5. There is change in revenue, change in operating income and change in EPS. We are required to calculate operating leverage. Operating leverage. What is the formula for operating leverage, everyone? Percentage change in percentage change in revenue. Revenue means sales. Operating income means EBIT. So please tell me in operating leverage, what will be the formula which I'll use? Percentage change in EBIT upon percentage change in sales. So can I say you will take 26%, you will divide that by 28%. Will that give you operating leverage? Come on, yes or no? Yes, sir. So you just have to take 26 divided by 28. How much is that? 0.93:1. So that is your OL. Got it? How will you calculate FL? Percentage change in EPS, because now this is dependent on EBIT. Percentage change in EPS, divide that by percentage change in EBIT, not sales, EBIT. Because this is FL. So FL we have to take only up to EBIT and EPS. They have asked combined leverage. Oh, then combined leverage means we have to take sales. I thought they have asked financial leverage. For combined leverage, then it has to be what? Sales. Barabar hai. But for FL also, we have to take what? EBIT. Okay. So what is the percentage change in EPS? 32. And what is the percentage change in sales? 28. So you'll take 32 divided by 28. What is that? 1.14. This you can do it on Calci also. There is no need to solve it in your book. Last question. We have sales, we have interest, OL, CL, calculate FL. Can you calculate FL? How will you do that? We will take CL upon OL. Fixed cost and PV ratio. Normal only we have to calculate it. Nothing new in this question. How many chapters are now done? 2 chapters. Tomorrow then we'll be continuing further with the next thing. Check. Okay. Good morning, students. Okay. Very quickly. Hello, everyone. Hello, online students. So glad to see you guys. So what are we doing? Today we are starting with our revision series day 2. But before we start with the next chapter, I have given you ICAI question to solve on ratio analysis and leverages. Okay. So I don't know whether you are able to solve this or not. Are you all ready with the answers? Okay, this is ICAI November 23 paper. Okay. So let us very quickly first crack this particular question so that we can then continue further with our next revision. So you were doing question number 1A. What is given to you? Just check. You are available with the following information of Brave, where there is debtors velocity, that is 3 months. Can I say this is nothing but your debt collection period, guys? Okay, and then we have stock velocity, which is 6 months. That is nothing but your stock holding period. Then we have creditors velocity, that is 2 months. That is nothing but creditors payment period. Then we have gross profit ratio, which is 20%. And the gross profit for the year ended 31st March 2023 was 10 lakhs. Stock for the same period was 40,000 more than it was at the beginning of the year. So can I say your closing stock is 40,000 more than the opening stock? Come on, yes or no? Yes, sir. Bill receivable were rupees 1,20,000. And from the following information, you are required to calculate what should be the amount of sales, debtors and closing stock. How will you approach the question? First, what is the first thing they have asked you, guys? The first thing they have asked you is that you are required to calculate the sales. Okay, just 1 second. Okay, so the first thing they have asked you is that you are required to calculate what should be the amount of sales. Okay, question number 1A. This is number 23. Okay, 1A, the first part is what? That you are required to calculate what should be the amount of sales when the GP is given to you as how much? Rupees 10 lakhs. So are you able to calculate what will be the amount of sales? What's the GP ratio, everyone? Formula. Give me the formula for GP ratio. Gross profit upon sales. We multiply that by 100. What's the GP ratio, everyone? The GP ratio was 20%. So this was 20 is equal to, do you have the amount of the GP available? Which is nothing but how much? 10 lakhs. and we divide that by sales into 100. Give me the amount of sales, everyone. Is it coming as rupees 50 lakhs? Okay, so the first answer is that my sales should be rupees 50 lakhs. Just check. Is my sales coming as rupees 50 lakhs? Okay, absolutely correct. Okay. Now what's the second part of the question? They have asked you to calculate your sundry debtors. So for that, can I use my debt collection period formula? Okay, so what's the formula for your debt collection period, everyone? Can I say your debt collection period can be nothing but average debtors plus average bills receivable. We divide that with what? Credit sales, and we multiply that by 12. Correct? And because opening is not available, your opening will be replaced with what? Will it be replaced by closing? Right? Now, what's the debt collection period which they have mentioned? 3 months. Debtors is 3 months. No, beta? So this is 3 months. Let the closing debtors be X. Have they told you some bill receivable given the question? How much is that? 1,20,000. Now if no data is given to you, we have to assume all sales are on credit basis. So can I say my credit sales is going to be what? 50 lakhs. Will this be sufficient for you to calculate the amount of the debtors? What is the amount of the debtors which you are getting from 50 lakhs? If I multiply by 3, divide that by 12, and if I subtract 1,20,000, how much is my debtors? So my debtors should be coming as 11,30,000. Come on, yaar. Online students, are you guys solving? So your debtors should be coming as 11,30,000. Just check. Is your debtors coming as 11,30,000? Perfect. Absolutely clear. Okay. What's the third part of the question, guys? They have told you that we are also required to calculate with stock, closing stock. So we are required to calculate your closing stock. Do you have stock turnover ratio in the question? What do you have in the question? We have stock holding period. Just check. Stock velocity is given to you. It means that the stock holding period is available. What's the formula for stock holding period, everyone? Can I say average stock, which I will divide that with what? COGS, and then multiply that by 12. Come on, yeah. Okay. So what's your stock holding period? How much months have they told you? Stock holding period is given to you as 6 months. Let the average stock be X. What is COGS? Sales minus GP. Will that give you COGS? Yes or no? Okay. So what's the amount of the sale, everyone? 50 lakhs. And what's the amount of the GP? 10 lakhs. So what's my COGS? 40 lakhs. And now what will be my average stock? So my average stock is now going to be 40 lakhs multiplied by 6. Divide that by 12. So my average stock is coming as how much? 20 lakhs. But do I need average stock or do I need closing stock? Closing stock. So what is average stock formula? Opening plus closing, which I have to divide by 2. So my average stock is coming as what? 20 lakhs. What's my opening stock, guys? Opening. They have told you that stock for the same period was 40,000 more than that was at the beginning. So let the opening stock be X. We have done this question yesterday only. X plus, what I have to take? X plus 40,000, which I have to divide that by 2. So this will now become what? 40 lakhs. And this 40 lakhs will now become 2x plus 40. So from 40 lakhs, if I subtract 40,000, right? And if I divide that by 2, what am I going to get? 19 lakh 80. So 19 lakh 80 is not my closing stock. It is my opening stock. To this, what do I have to add? 40,000. So can I say my final answer will be what, beta? 20 lakh 20,000. Is this going to be my closing stock? Solu, yes or no? Okay, so just check. Is my closing stock coming as 20 lakh 20,000? Superb. 5 out of 5. How many of you have got all correct? All the 3 parts correct. Raise your hands. From online students, how many have got this correct? 1, 2, 3, 4. From girls, 5, 6. Okay. But what about others? What happened? What did you do? What, you got it wrong? Sorry? The value of debtors, you got it wrong. Okay. Fine. But Are you all convinced now? How do you have to solve this? Very easy. Okay, to solve this particular part. So this was the first part of the question. Very good, Kausalya. Okay. Now, what is the second part of the, what is the second question which I gave you? So this was your question number 1B. Have you tried this? Okay. See here, what is given to you? The following details of Shiva for the year ended 31st March 2023 are given below. We have OL, we have CL, we have fixed cost excluding interest, we have sales, we have 12% debentures, we have equity share capital, we have income tax rate. Okay. So first part is what? That we always have to prepare your income statement. How do you prepare the income statement? How do you start with sales? Just check. In this particular part, they have done it without the income statement. Okay, no problem. Chalo. We'll do it with the income statement. So what is the amount of the sales which is there? Come on, everyone, please tell me. What's the sales which we have? 30 lakhs. Okay. And then they have told you that your fixed cost is given to you. So first, let me prepare sales minus variable cost. What do you get? Contribution minus fixed cost. What do you get? EBIT minus interest. What do you get? EBT. And do you have any tax rate? What's the tax rate? 30%. So I'll subtract tax at the rate of 30%. What will I get, beta? NP80. Now just check which all figures are there. You have fixed cost, which is 2,04,000. So your fixed cost is 2,04,000. Correct? And then also at the same time, they have told you that your 12% debentures are amounting to what? 21,25,000. So what will be the amount of interest? 21,25,000. And I need to multiply that by 12%. How much is this coming? 2,55,000. Right? Now, my dear students, they have asked you to first calculate what's the PV ratio, what's the EPS. But that is only and only possible once I have the entire income statement complete. Do I have in the question operating leverage? What is my operating leverage? 1.4. Now, what's the formula for operating leverage? Contribution upon EBIT. That is 1.4, right? Should be contribution upon contribution minus fixed cost is equal to 1.4. Yesterday I taught you this, right? So now let my contribution be X. So this will be X upon X minus. What's your fixed cost, everyone? 2,04,000. This will be equal to 1.4. So now my X will be 1.4X minus 2,04,000 into 1.4. So this will now give me 2,85,600. So now what is going to be 2,85,600? That will become my 0.4x. Hello. So what is going to be my x? So now my x should be coming as 7,14,000. So what is the x which I've got? Contribution. So contribution should be coming as 7,14,000. Now what's the variable cost which will come? So now in this particular case, my variable cost will be nothing but 22,86,000. And then from 7,14,000, if I subtract 2,04,000, what will I get? 5,10,000. And from 5,10,000, if I subtract 2,55,000, what will I get? 2,55,000. What's the tax rate, guys? 30%. So that is 76,500. Will I get my NPAT? Which is 1,78,500. Correct? This is our approach. Now in the question, what have they asked you? PV ratio. Everyone give me what is the first PV ratio formula? Contribution upon sales into 100. Do I have contribution? How much is that? 7,14,000. Do I have the amount of sales, guys? How much was that? 30 lakhs. Can I get the PV ratio? Hello. So now 7,14,000. If I divide that by 30 lakhs, this will be nothing but 23.8%. And what is going to be my EPS? Can I say EPS is nothing but whatever is the net profits available for equity shareholders? We divide that by number of equity shares. So can I say this entire NPAT is available for equity shareholders? Yeah. So how much is that? 178,500. I will divide that with what? Number of equity shares. Please check and tell me what is the number of equity shares. 1,70,000. Now am I in the position to calculate what is going to be my EPS? So 1,78,500 divide that by 1,70,000. So I will be finally getting this as rupee 1.05. Is this your EPS? Okay. What's the second part of the question? The second part is we are required to calculate if the company belongs to industry whose asset turnover ratio is 1.5. So industry's asset turnover ratio is 1.5. What is going to be our asset turnover ratio? It's going to be sales upon total assets. Do I have the amount of sales? 30 lakhs. But total asset they have not given to you, rather they have given to you debenture and equity share capital. So that is nothing but the amount which is invested. Debenture plus equity share capital. So that is the amount which is invested in the total business. So what is my debenture, guys? My debenture is nothing but 21,25,000, right? And what is my equity share capital? 17 lakhs. So that is nothing but total is coming as what? 38,25,000. Can you please give me now from 30 lakhs, if I divide this, it will be coming as 0.78. Is it lower than the industry turnover ratio? Okay. And what is the next part, third part? They have told you are required to calculate what? FL. What is the formula for FL? Can I say CL upon OL or EBIT upon EBT? It will give you the same answer. What's your CL, guys? 2.8. So you can take 2.8, divide that by 1.4. This will be 2. And what is your EBIT, guys? EBIT is 5,10,000, right? And what's your EBT? 2,55,000. Give me the answer. 2:1. So this should be your answers. Just check. 23.8, then 0.78 and 2. How many of you have got these three parts correct? Raise your hands. And let me just check. Okay, this so leverages everyone is enjoying. In ratios, why did you do this? It was such a simple question. Online students, how many of you have got it right? Only Kausalya. What about